And we are live. How's it going, everyone? We're back to another project showcase, Web3 discussion, and we have a really exciting guest building an application suite of financial products. I'm specifically referring to Mean DAO, who is building the Mean protocol. And for the users, most importantly, it's the MeanFi app. And pretty much what they are building at Mean DAO is a Web3 banking app that is pioneering decentralization. And there's a lot of exciting things going on here under the hood. So luckily we have Michael Triana here, CEO of Mean DAO, to really dive into what they're building on Mean protocol and all the exciting products that are coming up. Just for a brief introduction on Michelle, and he'll probably do a better job at explaining all of this. So that's the reason he's on here. But he's a serial tech entrepreneur that's founded several businesses, whether it's digital media distribution, travel, payment processing, and he specifically is specialized in compilers and software engineering. So there's a lot of really exciting things building at Mean protocol, and like most Solana protocols, there's a lot of talent here and really a lot of innovation under the hood. So I'm going to cut off my rambling here and I will just add Michelle in. So how's it going, man?
How you doing, Greg? Thanks for having me.
Yeah, it's great to have you on here. I know you're no stranger over at Solana News, and I've really just been reading up on your things from the outside. I remember one of the first AMAs we did, people were tossing stuff in our Discord regarding the money streaming and all other sorts of things you guys were building. And it was really just interesting to see. And really your guys' community is very notable. So before we get in, there's a few different layers here that maybe people who aren't into Web3 and crypto, they might not understand it. Do you want to start with what specifically, I don't know, where do you typically start for explaining what you guys are building? Do you start on MeanFi, Mean Protocol, Mean DAO? I'll let you take away where you like to start with this.
Sure. Yeah. So I usually start I usually start at the DAO level because that is kind of like the core of the organization. So we're a DAO, decentralized autonomous organization. For most of your audience, this would not be a new concept, but specifically, we are a protocol DAO. That means that what we do is we build products. There are different kinds of DAOs. Some DAOs are investment DAOs. Some DAOs are educational DAOs. Some DAOs do like different kinds of things in a decentralized management way. And in our case, what we do is we build products. We have two main products. One product is MeanFi, and that is what most of our audience is actually familiar with because it has a GUI, has a user interface that anybody can go click and use and feel very comfortable. It's very high friction with the user. Like the user is always in touch with MeanFi, and MeanFi is essentially a DeFi bank. Okay, and we enable much of the same workflows that traditional banking offers, which is kind of quite unique if you think about it from the DeFi perspective. Most of the projects are rather complex. They have either structured nonlinear products or linear products, or like all these complex kind of investment theses that are behind it, that are kind of bringing some of the primitives from traditional banking and traditional investment banking into DeFi. But I think that we are either one of the few or the only one that I can think of that is coming from a very different angle, and that is the angle of the consumer retail banking user and the retail investor. And that is, we want to kind of help people that are used to leveraging traditional online banking infrastructure from TradFi coming to DeFi. So the experience is a very familiar one with MeanFi. And we power a lot of the everyday banking workflows that are not available anywhere else, really. So that's one of our product, and it is probably the one that gets the most eyeballs, the ones that get the most, most people. We get often a lot of people thinking that the name of the DAO is MeanFi DAO because that is like the like the front of the the public facing part. But the second product is Mean Protocol, And Mean Protocol it doesn't have a GUI, it doesn't have a UI. It's all a set of on-chain smart contracts that allow MeanFi to do what it does, and allows any other developers that want to leverage everyday banking workflows or want to leverage our money streaming infrastructure to build on top of that. And we're talking from other DAOs to just companies wanting to do payroll, companies or companies wanting to do vesting schedule for their investors. There's the number of use cases is quite wide, and that is what is powered by the Mean protocol.
Yeah, and there's a few notable things we can definitely touch on. I really like how you guys outline what MeanFi is, in the sense of it being a Web3 banking app. That's really the front end that most users are going to be using, where you're going to convert these people. And it's just very elegantly put in the services you guys are offering in a permissionless and decentralized manner. And that's something that I want to touch on next, really getting into what is the long-term goal for Mean DAO. I know you guys outline in your documents that you guys are really pushing to, or let me back up. You guys understand that to get full decentralization, there needs to be a lot of users to happen. And this is something that I'm seeing echoed from some people in the space. I recently did an interview with someone building a multi-chain application suite on Hot Cross. So it's just a multi-chain application suite. And we got on the topic of, is DeFi really decentralized? How does the DAO really look to make this happen, considering a lot of what's building right now is somewhat centralized? What is the idea between you guys pushing so hard currently to really get this built, and what is the transition to true decentralization? What does that look like for the Mean DAO?
So yeah, that's a big question.
Kind of, yeah, definitely.
Has a lot of different angles. So let me kind of like divide that question into two.
Definitely,
I think
definitely.
that so I'm gonna answer first from the product perspective. So what is decentralization look like from a product perspective, and from the things that we're delivering from like just DeFi, and then let's take a look at what does decentralization and censorship resistance looks like from a DAO perspective and from an organizational standpoint. So from the product perspective, I think you hit the nail on the head in that, like most protocols out there, if you just look at their token holdings, right? I mean, some of the biggest names. I'm not even talking about like Serum, which has been here forever. I'm talking like some relatively newer entrants that, like, the perception of how big they are is measured in TVL, and then you go and look at how many token holders are actually holding the token, and you have like 1,000 token holders, and you're like, well, timeout. You have $1 billion in TVL, but 1,000 token holders. How is like they just? What is the average? I mean, all of those are like bazillionaires. I mean, these people are not, like, one swing from any of them will completely like wipe out of existence your product. Like any of those can make a big swing and completely destabilize that product altogether. We're trying to stay away from that as much as we can. And for example, right now we have a little over 12,000 token holders, just that are like pure token holders of Mean. In our case, we have over 100,000 money streams that are running Means. We did a giant airdrop to try to like spread distribution to a lot more people. So the average token holding for us is a lot lower than most of the projects. So like we're going wide instead of like vertical in terms of how much centralization and how much risk do we carry on each one of our users. So that's from the product perspective. And generally speaking, I think that when you are targeting the vast majority of users rather than the investors, you have a lot larger of a pool of people that are going to be both personally and financially vested in the success of your product. And we have a very large community, over 70,000 people on Discord, over I don't even know how many in Twitter right now, but it's really like we have over 120,000 users across those two communities. Um, and on the application itself, we have over 160,000 users right now. So like by the time that you start adding those up, and yes, there will be some overlap, of course, in between them, but I think that on the healthy side, we're looking at least 50,000 users that are like hyperactive on the protocol and hyper on the application, hyperactive user base. So that distributes a lot more the risk of any one of those really taking a swing for the fences on the application. Now, that's on the product side.
Yeah.
On the DAO and the governance side, the story is somewhat a little bit different in that we are still fairly centralized in our decision making in the DAO. We have 7 different working groups inside the DAO, each of which has a lead and a co-lead, and those working groups have different different missions to go out and do on behalf of the DAO. But a lot of the decisions ultimately come down to basically the leads and the co-leads of those working groups and us in the at the executive level of the DAO. Ultimately, the goal is that within the next 2 or 3 years, we think probably by the 24th month we'll be like completely hands off, meaning that there are going to be self-sufficient sub-organizations that are going to be able to take care of themselves from the DAO, and that's what we're driving towards. It would be kind of irresponsible to do it right now, simply because there's not enough maturity, there's not enough tooling, there's not enough validated leadership that has been doing this for Mean DAO for a long, long time. We are a relatively new DAO, and it takes time to identify who those leaders are, who are the people that can take initiative and can move things forward. And but little by little, we're getting there.
Yeah, and I think it's just a really interesting point, just because more so for new entrants who come in and they hear the word DeFi, decentralized, completely trustless, permissionless, just understanding that's really the northern star. But to get there, it's not like you're just going to throw out this idea, write it all out, and then expect people like me, users in the chat, to come out and build it for you guys. So you guys are really in there pioneering this, building the infrastructure that's needed, getting it in a usable format where it is this Web3 banking app. I really like that term. I've been using Web3 a lot more as well. And then even just on the protocol end, I know there's been a lot of just talk and discussion about token distribution on Solana, and it looks like you guys definitely had that in mind. So it's nice to see and get a little bit of fresh air, because we will get into your guys' strategic round, but it definitely seems like a lot of projects, it's the same names all over these rounds, and you start seeing crazy FDVs. And it looks like, from my quick glance at the tokenomics, you guys do have a very large portion of community distribution towards these DAO tokens that you guys have, governance tokens. So I'm curious, I'm going to keep moving forward here, because that was really my first question, just unwinding what you guys all have going on. So that definitely shed a lot more light than my brief little intro. But you were talking about the core team, considering that it is still in this process where you guys are building a lot, it still is centralized. Do you maybe want to touch on the background of the team, how you guys have this, the size of the team, all of that good stuff?
Right. So the founding team, we were 5 at the beginning. All 5 of us have CS background, computer science backgrounds. We didn't meet here for the first time. We were actually working together in a previous startup that essentially was doing, or is still doing, real estate and crypto settlement for real estate assets in the United States. So we have all been in the crypto space, just not in the DeFi space, which is kind of like a little bit of a differentiator there. Yeah. This is our first time that we're building DeFi products, but it's not the first time of us dealing with DeFi. We've all been long-time investors in DeFi all the way back to 2017 when everything really got started. We've been in the ups and downs, in the scams and the lost monies and the contract hacks, and like we've been on all of it, all of the above. But yeah, especially my the CTO Adele. We've known each other for over 20 years. We went to high school together, went to computer science, went to university and studied together computer science. This is not our first business that we're running together. So yeah, like there was a lot of synergy at the beginning, and that allowed us to really go from 0 to 1 very, very quickly. If you look at MeanFi and Mean DAO, both, this is not a single product. It's more of an amalgam of products that are coming together in the platform. And thinking that we did like all of those things with only 5 people, I think it was quite a feat, if you ask me. Right now we are 12. We are aggressively hiring, and we're expanding the team. We also have a tremendous amount of support directly from the DAO, and we have 28 ambassadors and moderators that help us kind of like communicate with all the communications and all of the all of the infrastructure around the DAO. We have thousands of people at this time. From the token holding perspective, with voting power, about 12,000 people. So I'm kind of like going from core to expanded team to like DAO managers to like just DAO members. Overall, it's about 12,000. And then everybody else, hopefully we'll get that DAO expansion to be larger and be a really, really large DAO sometime very soon.
I think that's really notable, and this really just gets right into my next question. It seems like you guys are starting to find this market fit. We touched on the users we have. You guys are really looking to bring out more products. It's not just, okay, we did money streaming, we're done. We have an aggregator, we're done. It's okay, we're a Web3 banking app. And I think something that is notable is you guys aren't just looking at, okay, what banking services. You're now thinking, okay, how can we bring innovation in the sense of money streaming, getting a much more block by block payment? And I have really just one question about money streaming. Other than that,
Please.
I think it's innovative. And I'll just stick on it right now. I started to deposit into the treasury, but then I just didn't keep going. My one question is when money streaming, if you're streaming to someone and you're the owner of the treasury, are you able to just cancel that if they are no longer fulfilling on the work they're doing, or does that vesting finish out to the end? So if I'm streaming something for an entire month, if they stop working by the second day, can you then go in there and cancel that stream?
Yep. So good question. Let me kind of back up
To
fill in your audience a little bit on money streaming. So
perfect.
Money streaming is one of our core primitives that we offer through the Mean protocol, and essentially what it allows is payment to happen from a sender to a recipient in a real-time manner. The same way that before you used to have to download an MP3 player and then play it on your an MP3 song and then play it on your MP3 player. Like humanity as a whole, the status quo of payments is that I have to send payments in a lump sum at one time. It doesn't matter for what it is. So even if I am offering a continuous service, like a job, for example, where people are working continuously, it happens that payroll happens once every 15 days. And instead of doing that, what we're powering now is the ability for that employee to receive, and this is only one of the use cases, but to receive essentially a payment as they are working. So as I invest my time in the labor market, I am getting paid in real time for that time that I'm putting on. So to answer your question, we have multiple types of money streams, Greg, and one of them is what is called an open money stream. And if an open money stream is essentially a money stream where we have a verbal agreement that for as long as you are not breaking the contract that you and I have set forth, like you are going to be working for me or I'm going to be working for you and you're going to be paying me for as long as I work. So that's kind of like the verbal basic contract. So long that that is not broken, the money continues to flow, right? And in that case, the answer is yes. You as the sender, you as the treasurer that is sending me money for my work, if I stop working, I technically broke the agreement, and that gives you the right to go through and say pause on that money stream until you figure out whether it is that I am sick, I'm planning to come back to work, and then you can resume that money stream to continue to work, to continue to stream money after I resume my activities. Now, it might be that I just quit. I don't want to keep doing this work anymore. And in that case, you go and you say, well, not only pause it, but close the money stream altogether. This person is not gonna receive any more money from me. And in that case, any unvested amounts basically go back to you, and any vested amount goes back to me, which I already earned, technically speaking, right? So that's one type of money stream. But you can think of, for example, when we have a different kind of money stream, which is called a locked or reserved money stream. Those are more useful for when you make promises. For example, investors. If you have an investor that comes and says, "Hey, I want to buy X amount of," IDO is a good example, right? So, or just any private investor that comes to you and says, "I have $1,000 that I want to buy of X or Y or Z token," and you're like, "Okay, I'm going to give it to you, but you cannot sell it." And they're like, "No, no, 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 I'm a long-term investor. I swear on my mom." Like, now they don't have to swear, right? Now they can simply go, and you can set up a money stream and says, "Okay, you're not going to sell it because you're a long-term investor. Instead of me giving you all the tokens and trusting that you are not going to make something stupid with it, you give me the money, you give me $1,000, and I am going to open up a money stream to you that is going to say, well, you're not going to get anything for the first 3 months, and then you're going to get a little bit on every block in real time for the next 3 years." So like that $1,000 worth of tokens are essentially spread out throughout time, and that is what a normal vesting contract is. So you can basically do traditional vesting contracts, and in those cases, because technically, like not technically, in reality, that investor already owns the token. So the only thing that you're really doing is preventing them from accessing it at all at once. All you're doing is basically token locks. So a money stream works very, very well with as a token lock. If you use a locked money stream, that's why it's called a locked money stream, because it's basically a token lock. And so you're guaranteeing the other party that they're getting that money is already theirs, or that token is already theirs. It's just they don't have access to it right this minute, right?
Yeah. No, that makes a lot of sense, Michelle. And I really appreciate you kind of taking a step back there, breaking it all down. I got a little excited about my question. It was a really simple question, but the reason I wanted to ask it is you guys have a bunch of different use cases this could use for. So my one big thing was like, can you cancel it? Of course you can. Yeah, simple question there. And I think it's really notable that these are very worthwhile contracts, products that you guys are giving out, especially the vesting contracts. We've seen something similar. Genesis Go is somewhat doing a money streaming through NFTs, and we've seen how that IDO has been massively successful. This is a product that, in essence, is utilizing the same thing, a smart contract to enforce these vesting schedules in a way that benefits both parties. The investor will start getting these rewards block by block, very real time, and you still have this contract, smart contract, enforcing the agreed on contract. So this is really the power of getting into Web3 DeFi that you guys are providing. A question here I had that I was going to ask a little bit earlier, especially on the side of scaling the DAO, the team. You guys got a $3.5 million strategic round from some really big backers. It was led by 3AC, SoftBank's Opportunity Fund, and Defiance Capital, alongside a bunch of other investors and angels. I'm really curious, what has this meant for Mean DAO in general? And more specifically, I'd like to ask, this might be a selfish question, but how has it been really looking to scale up this product with the support?
Yep.
That's something I'm always
Good.
interested in.
Good question. Both. So we do have amazing investors, and you mentioned a couple of. The round was led by 3AC, Defiance Capital, and SoftBank. And I think that for us, having those kind of like three titans in our cap table essentially means a number of really important things. The first one is that um, they are aligned with our vision, and being a DAO, it is important to have the right support for voting and for on-chain governance and voting, right? So um, uh, um, they are some of the most significant token holders at the moment, and they are very good token holders because they have an extreme alignment with what we're doing and with the mission and vision that the core team started with. Um, the other thing why those players are super important is because if you think about it, on the Defiance and 3AC side, we have the la creme de la creme on the investment side from the crypto perspective, right? So we have
Yeah.
an extreme uh, uh, access to almost any project that we want, any kind of relationships that we want. Like the access is tremendous, and there's a lot of strategic value that comes from having those connections directly, so deeply rooted into DeFi and crypto. Um, on the other side, you have SoftBank, and that is like creme de la creme of traditional finance, and they are now expanding their wings into more crypto investments. They are setting up a new crypto fund, and on that side, like being able to have very strong relationships, opening up a lot of doors, both on larger B2B deals that we're doing, or B2G deals that we are also going to be doing. It's very significant when you show up on the door with SoftBank by your side, and I think that is it's a very powerful partner that we have that will continue to grow with us as we continue to expand. Um, Beyond that, I think that the capital is good to kind of like get things going. If you sum up the 3.5 mil that we got from the private round, plus another 4 point something mil that we got from the IDO. That is very good startup capital that will get both the team being able to focus on building and not having to worry so much about, like, are we going to have some food to eat tomorrow, type of deal, right? So, and it also allows to expand the team, which is what exactly we're doing right now, to make sure that we are well set up to jump on that springboard forward.
Yeah. And I think it's really notable. I like to ask that question. And that's something I noticed. You guys had a amazing cap table in the sense that you do have these DeFi primitive funds that are really the creme de la creme, like you're saying. But notably, you also have traditional finance in the space as well. And I think this is a really important narrative as we start to see these Web3 DApps replace a lot of services we've seen before. And I think it's notable that you're seeing TradeFi understand this and really trying to jump into the space as well. So it's notable seeing, okay, not only these people who have been on the innovation for the past 5-6 years, but the people who pioneered traditional finance are also starting to see the innovation as well. So I think that's really notable there. And I've heard a
And
lot of
I'll give
different.
I'll
Yeah,
give
go
I'll give
ahead.
you one example actually about
Yeah,
this,
yeah,
because I
yeah.
think
That's
I think
great.
it is a telling story, especially for us, since when we started, right? So like the previous company that we were running was not a DeFi company, and we were dealing in crypto because it was a profitable business for what we were doing. But it was very much a traditional company, centralized. We were running software, and we got into this journey because we wanted to start distributing or allocating a portion of the salaries of our employees to be paid out in crypto. And that is the mindset that not only I had at that time, that is the mindset that many, many different places that are just traditional companies have today. That is where the city of Miami is offering their employees. That is what Miami Mayor, which is crypto mayor, Mayor Suarez, is offering all of the government employees. That is what dozens, if not hundreds, of companies right now in traditional finance, in traditional, just not crypto companies, no DAOs, none of that. Traditional companies that are looking to set up payroll in crypto because of the benefits that it offers when you have an international workforce that that you have to handle. Right? All of these things get solved by the kind of tech that we have with money streams and with payroll and with treasury management and all of those things. And for us, being able to position ourselves not only as a solution for DAOs, which we are, and we have already DAOs working on our money streams and deploying a lot of capital on our money streams, it is not just a crypto only solution. It is just a solution that solves real problems. And that's the way that we look at it, right? So like we are not exclusively Solana solution. We're not exclusively a crypto or a DeFi solution. We are a solution to real problems that need solving, and that TradFi not only is not solving, but it cannot solve in any meaningful way.
Yeah, and I like how you had that concrete example of even applications of how money streaming can be used. And something as you were saying that, and I can definitely spin this off into a question. But for me, after, I mean, a, a year and a half within Web3, within DeFi, a lot of these things are second nature. Like for me to open up Mean DAO and jump on, connect my wallet, it really is just as easy as me connecting to a centralized exchange, setting up a brokerage account, even logging into my bank website, like online banking. For me, it is extremely easy to transition. And I think a lot of people, it's getting over that first hump. I would argue within a month of being in Web3 on Solana, even less, like weeks to days, depending on the motivation you have. But maybe if you're a really slow user, it'll take you a month to get comfortable. Other than that, these applications are very easy to get into. I'm curious, how do you get over that initial hump? And one of the things I saw that was really unique is the fact that you guys have a fiat on ramp inside of MeanFi. But what are other ways you see getting users over this first hump? And I think it's a lot more so that users just don't understand there. I don't think there's really a big hump. Like you get a Chrome extension, everyone knows how to get ad block, and then you just log into a website. So what do you think is really, how do you get over that hump?
Yeah, I think that's such a great that's that's such a great and important question. And so there's a little bit of I think a challenge that we need to make. Like if we really want to be DeFi, that means a couple of things. That means we need to be trustless. That means that we need to be permissionless. That means we need to be self-custody, and this is probably the hard one here when it comes to like transitioning users. And that means that we need to be censorship resistant, right? So like all of those things need to be like green check marks if we really want to call ourselves a DeFi powered a DeFi bank. So I don't think that anybody has any problem with a permissionless. Everybody loves it. Yeah, I don't have to ask anybody for permission to do anything. Like phenomenal. Like who wants to be asking for permission? The trustless part, of course, I'm dealing with a program, not with a person. Persons are unreliable. People are, deceitful and liars, and they do wrong things all the time. I don't have to deal with a person. I'm dealing with a computer program, much efficient. I don't have to trust anybody. The censorship resistant is nobody, not even like like nobody has any argument against the censorship resistant part of things. Everybody wants their applications to be up and running all the time and not have any government institution, central authority come in and be able to sneak upon what they're doing, how they're doing it, and when they get shut down or when they are live. The only one that is a big barrier to us and that we need to still like get better at is the last one, which is the self custody portion. A lot of people, and this is not, I've seen many times the argument of like, the banks need to die. Like, no, the banks don't need to die. This is a solution for everybody. And some people feel a lot more comfortable with having their funds being custodied by somebody else, whether it is because they are kind of messy, they don't know how to keep good track of secrets and passwords and things like that, or simply because they are not good at tech. There's a solution for everybody, and custodial solutions have a place in the financial sector. But in our case, so that's kind of like where we take, like, yeah, we want to onboard the next billion users, but that is the billion users that want to be in control of their finances, right? So if you're looking for us to custody your funds, we are, at least it's not in our horizon to be to have any form of custody for retail users and retail investors. And that is the biggest hump that we see all the time, because self-custody means a couple of things. It means you have to have a wallet. It means you have to have the security around that wallet tighten up and well, understood. It's not easy for everybody to understand what a seed phrase is, and what a private key and a public key, and like some of these terminologies are things that kind of like throw people off when they are landing on DeFi. And we need to do a lot better job at the communication angle here. You mentioned our on-ramp. Even that is also a friction point, because that is the only point in the application where, because we're not doing the on-ramping ourselves, we're doing it through a partner. That partner, every time that you come in with a credit card or debit card, needs to do kind of a basic KYC on you, and they need to understand who you are, and they collect a little bit of information. It's not us collecting it, it's that partner. But if you want to use your debit card and your credit card, and you're buying more than $300 or 300 euros worth of assets, you do need to provide KYC for them. So then people start kind of like trying to answer the question, like, but why am I going through all of these hoops and stuff like that to get through my first banking experience here? And you're right, like we have not yet perfected the onboarding for absolute newbies and first time users, but we are relentlessly working towards improving and making that experience as buttery smooth as possible.
Yeah, and that's really more than the $1 million question, right? How do you onboard these next billion users? And I think there's just a couple points I'm gonna leave a few 2 cents in, like things like, again, it comes back to this idea that decentralization, trustlessness, a lot of this is really that North Star that I think Web3 and everything is shooting for, in the sense where US regulations, you're not going to get around some of these basic KYC things because they've been in the infrastructure forever. But for me as a citizen, I'm doing this anyway to sign up for Robinhood, these things, and they're much more centralized. So I think that's something to understand. I have conversations with my brothers, and like I onboard him onto DeFi, and it's like the same things you're talking about, where he's like, why am I doing this, and that to get onboarded to this experience? But then we flip around and I'm trying to get money through the fiat systems, and we run into massive roadblocks as well. And it's like, look, these systems have been building for who knows how long, like the past few decades, at least, fintech type things. And a lot of DeFi and stuff it's brand new. It's maybe the past 3-4 years if it's been building for a while. So
right.
A lot of these friction points are inherent, but they're being hammered out. And something I do want to touch on in the idea of this trustlessness, you mentioned that humans, they do like to lie. We mess up. Like, that's something inherent. I think something that may be glossed over again for the new user is when something is trustless. I think, again, this comes back to that idea, like it's the North Star. These lines of codes, these smart contracts, just to maybe get a little more preface, if you are using something like money streaming, your funds are in the Mean protocol smart contract. what are the risks behind this, and how are you guys looking to reduce these? And like, very simple, how I like to think about it is, in Web3, we're seeing very expensive lines of code.
Yeah.
So how do you guys look to secure that? And then what is the difference between self-custody, having something in your wallet, like just holding it there, versus the risks of having something in one of these smart contracts? Again, I apologize, Michelle. I keep getting excited and throwing you like these
No,
three
it's
part
it, it- it's
questions,
it's
but
perfectly fine, perfectly fine. So self custody is the idea that no other entity is actually holding on to your funds. And so when we talk about self custody, it usually comes in two forms. Either you are actually holding to your funds in your wallet, or only you on your wallet have access to those funds and nobody else, right? So it's kind of like two subtle but important things to denote that when every time that someone interacts with a lending and borrowing protocol, or with pretty much with a money stream, with any of the stable coin, like any of those things that have a smart contract behind the scenes that you are leveraging, you are effectively moving the funds from your wallet into that program, that smart contract. The only thing in there is that if the smart contract is well written and it has enough security around it, only you should be able to withdraw that money that you parked there, plus any other interest or APY or APR or gains that you might have done that smart contract provides. Okay, so in all of those two cases, whether you have your funds simply parked in your wallet, or basically your wallet is the only one with access to it, or they are parked in a smart contract that only your wallet or yourselves have access to it, that is what we call self-custody. And in a sense, it's very different from what you see in traditional finance, where, like, any money that you have in your bank, it, no, number one, not only you have access to withdraw it, the bank is actually using your money as in a secondary market to move it around, and all you see is essentially a fake number on your computer screen every time that you log into that bank. The funds are actually not there. You go with $1 million and you park it in Chase, or you park it in Wells Fargo, and tomorrow those are gone. You cannot go the day after tomorrow and withdraw $1 million. They simply, you just can't. Not only do they not have to be liquid, by federal law, especially after, and I'm talking about in the U.S. right now, but the Fed literally took, like, it used to be that there was a minimum balance sheet that the banks needed to keep of about 2%. They just, like, wiped that up in the last stimulus package. So, you know what, zero. You don't have to keep. So 100% of what you give to the banks can turn around and do something else with it, and they just show you the number, right? And you come and you withdraw, and so long that they have enough cash on hand to fulfill that, they'll give it to you. Otherwise, they'll be like, yeah, no, we don't have your money. And that's what it can cause. Bank runs happen because of that, and so on and so forth. So going back into DeFi, into smart contract security, so that kind of sets up two kind of critical points of security that are vulnerable. Number one is your wallet. You want to make sure that clearly the wallet that you're using is a secure wallet, and it doesn't have any leaks and doesn't have any things like that. Most wallets do get and wallet is nothing more but a smart contract that runs in your browser. That's it, or in your phone. That's all it really is. And a smart contract that is on chain is nothing more than that. It's basically code that is running on chain rather than on your browser or on your smartphone. So those, because it is software has bugs. No software is perfect, like the end, right? Like, think about your favorite piece of software. 100% guaranteed it has bugs. Photoshop has like 50 years of history, and they continue to fix it every month, right? I don't know. Windows, how many patches do you get? Mac OS, like, it doesn't, like, just pick your favorite piece of software. All of them have bugs. All of them have security vulnerabilities. The question is not whether it has it or not. The question is, what security measures are put in place to prevent those from being catastrophic in nature. And those come in the form of security audits, and we do work with security firms. Right now, we're actually in the middle of auditing our V2 version 2 of the money streams. We those should probably be coming out end of February, I want to say. But audits are not the end all be all. We work with 3 different firms on the audit: Certic, Soteria, and I forgot the other one. But those are not the end all be all. There are almost every single security firm, auditing firm, has had a major leak on their customers, on their projects, after they have passed the security audits. So, like, nobody's exempt from this. I think what is important is that we have an active approach to security, like the one that we have. We do unit tests on everything we put out there that has potential for leakage, or that is actually holding custody or holding assets on behalf of the customers, on behalf of a particular address. We have a constant input from the community. I don't even know how many times we get per week self-made reports from security experts in the community that are like, hey, look at this. I think that you can improve here, you can improve there, and all of that is because our code is open source. So anybody can go and read it and see it. We have fixed a lot of things since we launched. I gotta say, like, the first couple of weeks of money streams were not the most secure ones, but all of those things, like, we have gone through a lot of maturity process already since we launched that first version. We are on full version 2. Like, I think we've launched by now about 18 or 19 like releases we have had since launch. So very active development, and we run, again, unit tests, regression tests. We have a dedicated support team and QA team that is also looking at that all the time. We get a lot of feedback from the community and from the security industry, and we also are constantly kind of well plugged into the security and the auditing firms and all the reports and the new findings that they do. And we always, like, for example, I don't know if it was Soteria or I don't know who, but, like, not that long ago, like a couple of weeks ago, Niodine, I think it was. They published, like, a new leak that was on the SPL token contract, like very rooted, like deep into the framework. That if you are not doing algebraic math on your calculus, you can end up with, like, rounding errors every time that you deposit and withdraw from a smart contract that is using a particular SPL token, and you can end up, like, leaking funds little by little. In a matter of, like, a couple of cents per transaction add up if you just automate that and you're hitting that smart contract a lot. There were some borrowing and lending protocols that were affected by that. Ultimately, they kind of were able to address that with all of them, and no funds were at risk. In addition to that, because we're building in Solana intrinsically is a lot more secure than pretty much any other EVM. And that is for 2 reasons. Reason number 1 is the restrictions that Solana enforces on programs, and the computational units that Solana has in program, and the fact that we're using Rust, which in and of itself, irrespective of Solana, it is a low-level systems language that prevents memory leakage, which is one of the biggest problems that permeates, Solidity type of smart contracts. Alongside that, every single token and every single like ERC20 token that you see on Ethereum needs to be custom built. There is no ERC standard that everybody uses. In Solana, everybody uses the SPL token program, and all of the tokens in Solana use the exact same, Uber looked upon SPL token program. So just by that, we remove a lot of the complexities of creating the token and having to manage that token and having to deal with the token aspect of things. And in addition to that, we have Anchor. And Anchor framework is a phenomenal framework that reduces a lot of the errors and bugs that developers make all the time. It is a very declarative way of defining your infrastructure and your security, and it helps tremendously with the security aspects of it. So I think the combined approach of that, that's why we haven't seen any major, I think, any major leak in Solana. If you think about it, like most of the bad news that come out come from other networks, and that is not a coincidence. That is because our infrastructure is better. The language that we use to create those programs is better. Rust is an actual language. And the tooling, even though it is low level, once you get over the initial hump of learning that tooling, it actually forces you to think about the programs that you write in a lot better ways than you would have otherwise elsewhere.
Yeah, and there's a lot to pack up there. I mean, I was just thinking of tangents as you were going through that. You definitely lost me a little bit when you started getting into token contracts and whatnot, but I think there's a couple notable things there that you pointed out. One, the fact that Solana is in Rust. And one of the things I was going to ask you is why Solana? And I myself don't have any computer science, programming, coding background, but I've also started to hear these same narratives that Solidity is just kind of a clunky language. And within computer science, people are expected to learn new languages as they start to improve every handful of years. And Rust is one of those newer languages. So it's interesting to see that. And what I've taken from this is exactly what you're saying, what I was thinking about. I myself can't go in there and inspect all these lines of code, the infrastructure, and concretely say, look, Solana is more secure. But what you can look at is there's maybe been one smart contract risk hack sort of thing. It wasn't for a lot, and I can't even name it off the top of my head. Like that's shows a lot, especially considering the building. I have a couple questions here. One is regarding the open source, but before we get to that, how has it been building from the ground up versus being able to easily port smart contracts that are already made, like a lot of people are doing on Ethereum? How has the experience been building from the ground up? It sounds like Anchor helps a lot with that. I'm actually not too familiar with the actual infrastructure Anchor provides.
Yeah, so as a matter of fact, like when we started, our first version of Money Streams was not even based on Anchor. It was pure Rust.
Okay.
And it was hard, and it was not hard because Rust is hard. It was hard because when you combine all of the constraints that Rust gives you as a language, which are good constraints. Okay, they are things that prevent you from doing stupid things when you're programming. When you combine those constraints with the constraints of sea level, which is the runtime of Solana, which is basically like the where everything kind of runs, and like you end up with a lot of you end up having to have a very slow REPL, like the loop of trying something out, writing some code, trying out, see if it works, like trying changing it a little bit. Oh, that didn't work. Like that is a very slow process to go through if you're not using Anchor. So very quickly we realized that that this is not a sustainable like long-term plan, and many of the things that we were doing manually, the Anchor framework was already doing it in a standardized way for us. And the way that you need to think about Anchor is it is a framework that removes a lot of the complexities and a lot of the validations that need to happen every time that you enter a particular method call on chain on a program, right? So every time that you enter a method call, You need to validate, for example, that the person making the request to the method is the owner of the program, is the owner of the funds, right? You don't want to run anything that is not on behalf of the actual person that owns the fund. That otherwise, I would be able to essentially interact with the program to withdraw your funds. And like, we need to check that, hey, you're trying to access Greg's account. Let's make sure that you are Greg, right? So all of those things you can do it manually, or you can, in a very declarative way, do it with Anchor, and it facilitates and standardizes a lot of the error logging, a lot of the cyclomatic complexity gets removed from the program after you're using that declarative way of building, and it's a much more elegant way of also analyzing your code. And the security firms are also used to that by now, because it is the de facto standard of building in Solana, and it is the equivalent of having like a really powerful library, so that you don't have to reinvent the wheel every time. So it allows you to like code a lot faster. It saves you a lot of code. It allows you to reason over the code that you're writing a lot better than if you didn't have it. So yeah, it's a godsend.
Yeah, and this is all really getting into one of my questions I always like to ask: why Solana? So you just touched on it perfectly. And then from my view, it really seems like this infrastructure is starting to play a role, and these challenges that projects were having to deploy smart contracts in the beginning are starting to be figured out. This infrastructure is coming in. I mean, just this week, seeing the amount of mainnets that have deployed on Solana, I think is a great testament to that in general. And I think just looking at it from the Ethereum side, I was listening to these layer one Twitter spaces. It had the co-founder of Near, Avalanche, and then Anatoly from Solana. And one of the things that kind of stood out to me is, one, Ethereum is easier to use at the moment just because there's already been so much Solidity infrastructure built up, and that's what everyone's used to. That's what hundreds to thousands of dApps are built in. But then you also have this issue that now ETH is kind of just stuck with a lot of this tech debt. And I think something interesting to see potentially play out is, as these infrastructure starts to get even better on Solana, more dApps start to develop. I'm curious if we do see what I'm hearing, Solana really slingshot ahead of Ethereum in terms of being able to program more complex, more secure smart contracts. So that's something on my end that I'm definitely curious to look out for as more and more starts building. If this code, and it really sounds like it, like, I'm not disagreeing with all of these smart people who are like, Rust is the way to go. And you're seeing it on other
100%.
blockchains as well, Cosmos, Terra. But yeah, I think that's just a really big differentiator to get into. Yes.
I'll tell you. I'll give you a parallel. And I hope that the EVM crowd at some point realizes that either they have to make substantial changes to Solidity as a language, or just give up on it. The same way that Apple gave up on Objective-C, which was a hideous language. Like, holy smokes, programming on that thing was like putting nails through your brain every time. But they started there. They kind of like they knew that they wanted to build a community around their own language. They didn't want to have any other dependency outside of the Apple ecosystem. But then after a few years, like, they knew that it wasn't perfect. They knew that they needed to build something better, and along came Swift to replace it. Very elegant language, a lot simpler, a lot easier to understand, a lot easier to reason about, and they like discarded 100% all of the Objective-C thing, right? So that is an example of a company that knew that they didn't want to have a dependency on some other outside of their control ecosystem, but in the meantime, they were making the investment on that next evolution that was not just improving Objective-C, it was just throwing it out of the window and replacing it with something completely new and a lot better. I can only hope that that is the plan for for just EVM in general, that delivers solidity. Solidity can evolve into being better than what it is. I don't think it is an elegant language at all. I don't think it is a safe language at all. I think it has a lot of problems, and I I think it's kind of like a made-up language. It wasn't thought out. It wasn't thought out at the moment to like very well in its totality. And it just happened that because it was the first one and it was the only one that everybody could jump on, that it caught on fire because you only had one option, right? Hopefully, Russ is here to replace that, and other chains realize of that and jump on Rust too.
Yeah, and I think a really big thing to kind of cap on this point is just seeing the talent that has came to Solana and is building on Solana is another indicator of the innovation that's going on there. So these are all things that it's nice to hear from your end, getting your analogies from the programming side, from a builder, and then being able to draw my own tangents from what I'm seeing on the outside, all of the developments. I'm curious to jump maybe. Oh yeah, that was where I was going. I wanted to talk about open source a little bit. I know you guys have a integration with Jupyter. You guys were able to integrate Serum's Clob as well. What has the open source really meant for building in Web3? I think this is, if I'm not mistaken, something we saw really early on in tech. Like most APIs were open, but they quickly got gated off. But now here in Web3 DeFi, everyone is really gunning towards this open source. What are the advantages? Is it something where this will ever start to get gated? Do you think that's somewhere this could
It has
go?
already started, and
Okay,
I can
like Uniswap and stuff, right?
yeah, and I can tell you, like, it is a little bit of a bittersweet type of approach, and it has so the good part of this is I don't think they are as much as a good part as they are an absolute need. It is really difficult to sell a product that people are entrusting their money and they cannot see what that product is doing with their money, right? So like if you're Facebook and all they are gating from you is your post or your photos and stuff like that, you might be like, I don't need to look at the Facebook code. If it is the bank, you don't ask the bank to see your code because there is some sort of insurance because they are holding onto it. So they are essentially their own customers, and the relationship with you is, give me your money, I hold it for you, and I'll give you a window through which you can look at it. But I am the one that I'm actually like managing your money inside. So like my software is my risk, not yours as a customer. But in the case of DeFi, you are dealing with basically a machine. And if you don't have a support number to pick up the phone and say, hey, like, where's my money? So if you're incapable of seeing through the window to see what the machine is doing with your money, and that's the equivalent of seeing the code, like how the machine is made, it is really difficult to trust that machine. So I myself, I don't deposit anything on or I don't interact with any contract that I cannot go and read the code. That's it. That's but that's me personally, right? And many people that I know, that is not a problem, and they go through and they interact with that, no problem.
Yeah.
That has a negative side effect from the business perspective of the person like building that machine, and that is very easily copyable. Anybody can go and beyond the benefits of anybody can actually see your machine and see the machine that, yes, it is secure, yes, it is safe, look at what they're doing, I understand what's happening. Anybody else can come and fork that off and get essentially a copy of the code in 5 seconds of what you've taken months to build. And they essentially now are a competitor, and all they have to do is change your logo or change your stuff, right? So that is a very negative downside to that. Unfortunately, there are plenty of projects that still do that, and that they take advantage of that. We had on V1 on the V1 repo 49 forks. 49 forks. That is an insane amount of people that are forking our repo.
Yeah.
People that we didn't even know. Some of them were like, that was the only fork on that account. So I think that what is it is a little bit discouraging on that, and I think that what projects now are starting to do, ourselves included, is that newer versions are kind of gated until they pass all of the securities and all of the audits and all of those things before they get out into the public, and then we have a license that we're putting on that, and anybody that forks or that we realize that has done that illegally copied our code base, either without attribution or permissions, which are two things that you need, we'll take legal action on them. That has happened already once, and we are taking legal action on that one company. I'm not shall not be named here, but so on that perspective, there's that part, but that still doesn't stop anybody from just cloning the whole thing, changing the names, or changing a couple of the parameters and changing the logo and calling it a day, and that's it. They start building from that,
What I
or at
will
least they get.
say, sorry to cut you off, Michelle, but what it really sounds like is part of why I think we see so much innovation is it now forces you guys at Mean DAO to eat glass, right? You guys
Yep.
are like, okay, how do we stay in front of these people who are in essence maybe not 100% lazy, but the people who are just taking it 100% fork? Now it forces you guys to keep innovating, and I think that's
Yep.
why we see the space to like moving so fast. And
100%.
just to jump in here, I didn't mean to cut you off. I just
No, please.
got excited there. But in the case of Jupiter, I think this is a great example. I've talked to Ben. He came on here for a roundtable discussion, and what they're building is amazing. But just thinking from the aspect of Jupiter, they have this SDK that they're allowing a bunch of people to integrate. From their business model, they're now losing traffic to their site, things like that. Do you see in a future where people start building these as almost B2B solutions where it's maybe not 100% open source, but they'll be able to use the integration for some sort of almost like subscription based type thing? Is that?
Yeah. So I in the case of Jupiter in particular, I think it is an interesting case for open source, because if there is a project that I don't think needs to be open source, is them. They don't hold, as a program, they don't hold any kind of assets on behalf of anybody at all.
Yeah.
Like their smart contract, their machine, all it does is it's like a air traffic controller is what Jupiter is, right? So it is basically, kind of like defining in real time what is the best route that you need to do. But ultimately, they are using those other machines, the AMM's machines, the Orcas, the Radiums, the Aldrins, all of those other ones to actually do the work. So they're basically a forwarder, a package director, TCP/IP router in a way, of an exchange. So in that case, because they are not holding to any actual assets, I don't see anybody really needing to look upon that machine as like, otherwise I'm not going to use you, right? I use Jupiter all the time through MeanFi, and I think it's a phenomenal product. But I don't need to look at that, because I don't need to look at their code, because the wallet itself, every time that you run a transaction against any smart contract, and you need to approve that by wallet, your wallet runs something that's called a simulation. So the wallet runs a simulation, and then it tells you, whether you're using Soulflare or Phantom, all of them run simulations that they'll tell you, hey, these are the changes that you're going to see in your balances before they actually get executed. So you kind of know what's going to happen before you even approve that, and they don't hold on to any assets. So yeah,
Yeah. And just to jump in there, I think it's just amazing to see what open source, or not open source, but the ability to allow for these integrations and really working together as an ecosystem does. And yeah, I guess one of my big questions there, do you see it viable for products like Jupiter to keep these integrations for free forever? Or do you think these may start being gated off? And maybe not necessarily in the case of Jupiter, but we see a lot of different protocols offer integrations. Do you think it's something where at some point it does flip to some sort of gated, like they may still let you use it, but they need to operate some sort of business model behind this?
I'm gonna leave that for Ben to answer.
Fair enough. Fair enough.
I'm not gonna issue voice on the internal workings of how Jupiter monetizes their work. But I do think that that if we want this industry to grow and to have legs, that in general we have to have a viable business model that is sustainable and that is scalable.
Awesome.
And yeah, so I'm just gonna leave it at that.
Yeah, and I also could just be mistaken here as well. Jupiter maybe has some sort of fees through the integrations. Anyway, we'll move on. We're spending a lot of time on some broader things. I want to start to wind this down a little bit. I don't know if we touch, or we did touch on most of MeanFi's products here. Correct me if we missed anything big. We got the money streaming, we got the aggregated decks, we have the on ramp. If
We
there's
have
not, yeah.
the dollar cost average.
Oh
Is
yes, yes. I
also
saw
it's
someone.
also part of that. So the DCA is essentially a on-chain cranking system that allows you to buy with the on-chain aggregation, allows you to buy and dollar cost average any token that we support there on a recurring basis. So workflows like buy $50 worth of BTC or $50 worth of Mean or $50 worth of whatever token every week can be done there for the first time, completely permissionless, completely trustless, completely self-custody, completely censorship resistant, like, cannot be shut down. It's all on chain. So that's our third program. We have a few other programs that are coming live very soon that have to do with mostly with organizations and DAO tooling. Namely, we have a multisig UI on top of the Serum multisig that is it's looking really cool already. We're really excited to bring that to everybody to be leveraged. We also have a multi-sender that is going to come live very soon. So we have a lot of like DAO toolings and DAO distribution toolings and things like that are products that are in a way built on top of a collection of these things where you combine money streams with multisigs. Now you have a very powerful mix there that you can leverage for a number of different workflows that are very common in DAOs and organizations.
Yeah, that's awesome. And this really brings me to my next question. We were talking a little bit about banks, how they actually go ahead, they'll custody your money, then they will go off and do whatever makes the most sense for them. And then you get left with your measly 0.01% interest rate. Sounds like this multi-sig and money streams start to set up things where you can start streaming money to maybe certain liquidity pools or investments. I don't know if I'm understanding this correctly. I saw some mention of being able to route the money stream to
Yep.
certain scenarios, and that sounds like what you were just outlining there. I'm
Yep.
curious. I know you guys have a 5-stage roadmap for this Web3 banking. I'm not going to make you go through the whole thing. People can
It's
find
actually
that.
really simple. Yeah.
Okay, yeah. So I was just going to ask you, what are like the most notable things? Like if you could just TLDR that, and if it's simple, it sounds like yeah.
Yep. So right now we are currently in. So we have 5 stages. All the stages start sequentially and end sequentially, but they don't operate sequentially. So they have certain parallel execution thread there. Currently, we are running in parallel the consumer and the investor tracks. And we are about to wrap up the consumer towards the end of this month. We should basically wrap up all of the goals that we had in the consumer track are basically done. And the focus there on that stage was to be able to allow consumers to do consumer retail banking users to do the things that they normally do in the traditional banks, being able to schedule payment, being able to send remittances, being able to send money in a recurring basis. Like all of those traditional banking workflows are 100% covered already. We have other improvements because in the case of DeFi, you normally have multiple wallets and you have different kind of ways of looking at your money. So we do have still things to do there, and I don't think that that's ever going to end. But from the like operational perspective, we are coming to the tail end of that stage. We are also in the middle right now of the investor stage, and that is very focused on retail investment banking. So that is basically people like you and I that are not big institutions that are deploying massive amount of capital. It is basically your money, my money. We want to be able to invest it and be well educated about, how can I move my money in a meaningful way? How can I deploy my capital in a meaningful way? That still has a couple months left before we can call it a wrap. But some of the workflows that we are powering there are that are coming very, very soon is we're going to have staking in the portal, not only for Mean token, but for other tokens as well. We're going to be opening up so that people don't have to be jumping around 10 different protocols to decide which tokens they want to stake of the ones that they have in their wallet. We're also going to open up token locks directly in portal, so you can actually have a multiplier effect on your stake if you decide to lock your tokens for longer periods of time to support the protocol. We're also going to bring protocol on liquidity. The 3x3 crowd is going to be very very happy on this as well. Towards the end of this month, we have some really big announcements around that. So very excited about that. In addition to that, probably the biggest milestone that we have is around lending, borrowing, and stables. So those are the three main pieces that we're bringing to the investment piece. And yeah, so to be announced some of the details around that. But we're working with multiple protocols and bringing their own products into MeanFi and exposing that through MeanFi directly. The same way that we did, for example, with Jupiter. The same way that we've done all of these integrations that we've put together so far. We're bringing the other ones in, and we're bringing it with our own flavor, especially around simplicity. And that's our bread and butter. We wake up in the morning, it's like, how can we make this simple? How can we make this simple? We go to bed at night thinking, did we make it simple? Did we make it simple? Right. So
yeah.
So that's 1, 2, 3. The third stage that we have is business, and that is also starting very soon, immediately after we wrap up number 1, which is the consumer. We're starting the business one. We already have many products, like the ones that I mentioned that we're doing for DAOs. The treasuries is a very business-centric B2B type of product. The payroll is very B2B type of product that we also have live right now in production. So we already, in a way, have started to bring or have advanced a lot of the things that we had planned for B2B. But we have other products that we have not even touched yet that need to come as part of that business stage. And then stage number 4, number 5 are institutions and ecosystem, and those are for less common workflows, but it's basically low consumer base, high volume of assets being traded and exchanged and managed in there. So yeah.
Gotcha. Yeah, that's sweet. You guys have a lot coming up, and it's just great to see that you already have this infrastructure laid out of what the core of MeanFi is, but it's really only the start. You guys have a plan for what's coming next, ton more integrations, and really looking to innovate and make this product that makes sense for people to use. I'm sitting here thinking to myself, and it's like, why am I holding cash in a bank? And that's like a lot of things that people fundamentally just think is a good idea, just saving cash and holding it in a bank. But with like the macro environment, there's a lot of reasons and arguments against that. In general, to just wrap it off on something more broad, what is your outlook on the sector, and specifically, where do you think Web3 banking is going and what it'll turn into? I mean, you just outlined very specifically what MeanFi is going to do with Web3 banking, but what do you think the sector looks at like? Do we get a lot of new entrants? Are we going to start seeing banks, more things like SoftBank trying to enter the space. What are your thoughts on that, Michelle?
Yeah, so I think on the consumer banking, it's good that we are pioneers and we're one of the first that are doing that. But I think it's just a matter of time before we see a lot of other entrepreneurs and people jumping into the space and trying to really create their own versions of the bank. And I don't think that this is a winner take all market. There's plenty of rooms to target very specific use cases. I know in Latin America, the workflows that people do on their everyday banking is very different from the ones that are done in Japan, right? So there's multiple niches that are available for attack here. So I competition is welcome, and we always want to see diversity in the space. The worst thing that it can happen is that everybody says MeanFi, and then we have we are the one to so we are what we are fighting for, what we're fighting against, right? So we're fighting against censorship resistance, and if we have a single point of failure on the global banking system through MeanFi or through some other bank, that's exactly we become what we are fighting for. So I think that this is a space where there's a lot of innovation that is yet to come. And we look forward to working with everybody and all parties on this. On the investment side, I think that 2022, if 2021 was DeFi summer, 2022 is going to be I don't know, DeFi lava. This thing is going to absolutely explode. This is the year where there's no way we're gonna end up the year with at least a 10x growth from what we started it. So just mark my words, and let's have this conversation back in December and tell me if we're not at least 10x industry wide.
As Suzu said, we're definitely super cycling. It sounds like seeing all the talent come in, and even just hearing it from your perspective. And I think a really big thing is the building is not stopping. More and more entrants are coming into the space, and the amount of capital that is being allocated towards building is tremendous and incredible. And yeah, it's just really great. I'm 100%. We're going to have a conversation by next December, maybe a couple in between there, and even just outlining the innovation that MeanFi continues to do. And then, yeah, I think that's an amazing point that as more people come in, it fosters more innovation. People are going to latch on to certain niches, even specifically, you guys have this money streaming, and you have this idea of in Miami, they are starting to pay people in cryptocurrencies, and you guys are building out a payroll system. And I'm sure this is the first part of the niche, even getting into money streaming. You guys have 8-9 different potential use cases on your docs. So there's a lot to be excited for. And I'm just curious, Michelle, do you have anything else you want to wrap up on? I mean, we hit all of the big points. We even circled a little bit to Web3 banking, bigger ideas on that. What do you want to close this off with?
I mean, you us,
kind of did, but
we are right now in a hyper growth cycle also inside of the DAO. We're just in the process of starting to deploy and work on our own treasury, and so the next few months are going to be really exciting because we're going to be doing a lot of new things. We're growing like crazy. We are looking for talent almost on every single area, from marketing to sales to product development to engineering to just you name it. We have open vacancy positions. Reach out to our ambassadors, reach out to me directly, reach out to us on Twitter. If you have the talent and you have the passion and you want to join one of the fastest growing companies, and so far I think the only DeFi bank in all of Solana, come on board. We have some room for you.
Definitely.
That's my closing.
Yeah, and I'm going to go ahead and wrap this up real quick, but just on that note, if you guys are still here, you watched through the whole thing. For myself personally, if you really want to get involved in Web3 and DeFi, just get involved. It sounds like, I mean, Michelle just told us they're doing rapid expansion. It's really just as simple as getting involved in the community. For me, all it took was making a crypto Twitter. And within 3 days after making a crypto Twitter, I found my business partners and we were able to found what we have here at Solana News, BSC News. So all I have to say is if you've been around, definitely just get involved. Maybe it works out, maybe it doesn't, but it sounds like the best part about crypto is there's so many different verticals that the DAO is looking to build out. And yeah, I'll just wrap it up on that, Michelle, and then I'm going to do a little outro here, but I think we touched on mainly everything that's important. So
thank you very much, Greg, and the team at DeFi Direct. Thank you very much for having us, and really enjoy working with you on all these fun episodes.
Exactly. And we're going to be keeping our ear on the ground for what's going on at MeanFi. So stay tuned, and I'm going to wrap this up, Michelle. So peace out. Thanks for joining us, man.
Thanks.
Awesome. So again, like I said, I'm not going to go over too much here, but we really got a holistic view on where Web3 banking is, specifically MeanFi's role in it with their different products such as DCAs, money streams, aggregated swaps, fiat on-ramp. That one's definitely massive. But this is really the infrastructure where it's starting. And the Mean DAO is really just looking to continue this innovation. They have the support, they have the users. So I'm really excited to see where this goes in the future. And you can definitely see Michelle, especially even the investors in the space, really getting exciting for what's coming up in the future. And I would just strap in for a ton of innovation. For anyone who's still here, I encourage you to follow our Solana News Twitter account, subscribe to the DeFi Direct YouTube channel, and leave the video a like so we can know to have Michelle back on. And appreciate everyone for tuning in. Peace out.